moving on, Indian bond yields have seen a sharp fall this week, with the yields now at fresh 13-month lows. While yields have been falling since the monetary policy on April 8th, the fall has accelerated in this week. Latha is here to analyze the reasons for the fall. Latha, over to you.
Actually, it's a stealth rally. And although this week it is 8 basis points fall over the last 2 days, if you take from policy day, it is about a 20 basis point fall. And if you take from March 1st, then it is a 40 basis point fall, which means, corporates can actually borrow at half a percentage point less if you are borrowing from the bond market. This is the lowest the yield has been since April 8th of last year. So it's a 13-month low that bond yields are at. That's huge. Now, what is explaining this fall? Of course, there are the immediate reasons. US yields have been falling. Where are they? 3.5% in the past month or so. Expectation that both the RBI and the Fed are mostly done with rate hikes, and the expectations of US recession, slowdown, if not recession, is pushing down crude prices. And, at 75, that will mean it will eventually at some point get passed on. But the bigger reason is the number of buyers have increased. The big buyers have been the HDFC twins, HDFC Bank and HDFC. Obviously, they have to come with SLR at 22% for the combined balance sheet on the day of the merger, which is whatever, June or July or whenever it is. So there's huge buying by these two guys, which is, 18% of the new balance sheet. HDFC balance sheet is a large amount of money. The other big buyers have been insurance companies. Remember, the budget said that over 5 lakh premium will not get tax benefits. So a lot of the high net worth individuals bought those high-paying policies, and that led to a lot of money which, get invested in the form of FRAs, forward rate agreements. Because these insurance companies want to invest this money over time in bonds, because it's an insurance policy, they enter into these forward rate agreements with banks. So banks typically warehouse these bonds for insurance companies for subsequent years as well. That's a huge amount of buying that came in. So all this led to this near 0.5% fall in yields. So cost of capital has come down. Now the next question, of course, is how much will it continue? The dealers I spoke to thought that there could be one dip below 7%. 6.9 something could trade for a bit, but, there will be supply. The Indian government is, week after week auctions are coming. So probably around 7 will be the floor. But we will have to wait and see, another event can come, India's inclusion in the bond index or something. So the point is that there is this surprise fall in the cost of capital, and it will have attendant advantages to growth.
Okay, that's about the bond market, but let's